Let's see. Our next presenter is Jamie Somerville. He's the Director of Corporate Development for Canacol Energy. Canacol Energy, their ticker is CNE. Canacol is the largest independent onshore conventional natural gas exploration and production company in Colombia, supplying approximately 20% of the country's gas needs, with a goal of continuing to grow their gas production business in a manner that maximizes return to the shareholders, while at the same time being a leader in their commitment to the environment. Help me welcome Jamie Somerville.
Okay, thank you, Dan, and thank you everybody for being here. It's always good to come back to EnerCom. I will start by talking actually about the people. As Dan said, we've built the largest natural gas producer, independent natural gas producer in Colombia. We supply about 20% of the market. That's about 200 million cubic feet a day in Colombia. And I think that's only been possible because we have a lot of skilled, talented people. A lot of our management team had a lot of experience before we started in 2008. In particular, a lot of the bios mentioned Occidental Petroleum, which of course has been was in Colombia until very recently, and was one of the larger oil producers there for a very long period of time. And I think that explains how we've been able to grow, acquire the right assets, acquire the financial strength to build a sustainable company. So the basics, we're listed on the TSX. We're also listed on the Colombian exchange and on OTC. Our assets, as you can see on the right-hand side, the yellow blocks in northern Colombia, in particular the largest block there is where all of our production is. That's in the lower Magdalena Valley, relatively close to the northern Caribbean coast and the city of Cartagena. We've got a market cap of $300 million in US and an enterprise value of almost $1 billion, which tees in and around with the valuation of our reserves, somewhere in between the 1P and the 2P reserves valuation on an after-tax NPV 10 value. But that excludes a large amount of prospective resources that we have. We are an exploration and production company. So you can see we've got over 300 BCF of 1P reserves, 650 BCF of 2P reserves, and the prospective resources on a risk basis of 7.5 TCF are just simply much, much larger, which I can address as I go through the presentation. So to talk about Colombia a little bit and our unique proposition here. So Colombia did have a boom of investment into the oil and gas industry almost a decade ago now, or thereabouts. And so we do have peers, but they're virtually all oil focused. We really are unique in terms of having this focus. As you can see in the bottom right-hand corner in terms of who owns the gas reserves in Colombia. So there is Ecopetrol, the state oil company. The nature of previous contracts in Colombia is that after 20 to 25 or 30 years, they revert to the state oil company. That's how the system used to work. And that's why Ecopetrol inherited a lot of large gas fields. And that's where most of their reserves come from. We are really the only company that has been successfully exploring and building production to reach, as you can see there, for 2022, 17% of the natural gas supply in Colombia. And why are we attracted to being in this market? We started in oil in Colombia, but what we saw was that some large discoveries that were made in the 80s and 90s were likely to go into decline. We started in the gas business in northern Colombia in 2012 and successfully have built our production to fill a supply gap that opened up as the large field that was supplying most of northern Colombia went into decline, and that's how we've been able to find a market for our gas in northern Colombia. And what we now see as we look forward, and I think everybody in Colombia sees this, is that the largest field in the south is about to go into decline around the middle of the decade. And so to us, that's just a very attractive place to be. We see the likelihood of growing demand, and that that's not adjusting for the fact that I think in all likelihood the government is going to want to see less use of coal, and the other component here includes wood and biomass, or wood is biomass, which is not a great fuel when you're using it in your household. So, you know, if any energy transition scenario in Colombia probably has to see significant increase in the use of gas as a transition fuel. So we're very attracted to the Colombian market. For background, Colombia produces and supplies about a BCF a day of gas. There is a small LNG import terminal, but it's really not used that often, particularly when LNG prices have been as high as they have been in recent times. So basically, it's an isolated market. And that's been very good for us. What we've seen is that as we've developed our reserves, we've negotiated lots of long-term fixed price take-or-pay contracts. They're all denominated in US dollars. And as you can see here, the yellow line on the left, that is our quarterly gas prices compared to average gas prices for the key benchmarks, Henry Hub in the US and AECO in Canada. So clearly, our business is providing much more stable revenue base than an unhedged gas producer would have in North America. And from a volatility point of view, that's just what we're showing on the right-hand side. Obviously, that feeds into having these long-term fixed price take-or-pay contracts is very good for our ability to plan our business, and it's very good for our cost of capital. So a little bit more of the history here. We started in oil, started to transition to gas in 2012, acquired an asset that was producing under 20 million cubic feet a day. We explored in and around it and made a series of discoveries. We've grown our reserves, as you can see on the top right, and we've grown our production. While doing that, we had to build or sponsor pipeline expansions from our assets. We've done a series of those, and we're working on another one that we hope will allow us to go significantly higher with our production rate at the end of 2024. So I mentioned the stability of the business, and I think this really shows that. These are our financials, our net backs. So you can see the prices on a quarterly basis. And Q1 and Q2 this year have started to be very good to us. What's happening in Colombia at the moment is that Colombia has the highest rainfall of any country in the world, and 80% of its electricity is supplied by hydroelectricity. And the high rainfall in the country supports that in most years. However, there is the El Niño weather pattern, which causes unusual weather actually all around the world, really, but especially in the Americas on the West Coast. And the impact that it has in Colombia is that it typically causes a drought, which means that there's less hydroelectricity available, which means that there is a tendency for gas prices to spike whenever there is an El Niño event. And although we've only seen a little bit of drought so far, we think the forecast is for the El Niño to really kick in terms of the drought effect, maybe in the fourth quarter in October here. But I believe that the market has already sensed it, has seen the forecast, and so the spot prices that we're seeing have been very good. So what happens is that we're selling about 80% of our production. We have 160 million cubic feet a day contracted on these long-term fixed price take-or-pay contracts. But in the first half of the year, we sold 185 million cubic feet a day. So roughly the difference between those two numbers, which would be 25 million cubic feet a day, is what we've sold into the spot market. And that's where we're able to take advantage of these higher prices that we're seeing now, significantly higher prices. So we have seen some LNG cargoes come in recently, and that implies, spot pricing north of $10 an MCF, which is obviously very significantly different to our long-term fixed prices of $5. And we are optimistic that we will be able to produce well over 200 million cubic feet a day of gas and have a market for that in the second half of the year here, and potentially even roughly match the high end of our guidance in terms of sales volumes for the whole year. If that scenario does play out, our pricing guidance on the bottom right here that you can see of $4.95 would be very conservative, and we would roughly get to the $260 million of EBITDA that we're forecasting, which all in, so EBITDA, obviously we need to take taxes and interest payments off of that, which would, depending on how things play out, it's going to have us, with the $26 million of dividend that we're paying, it's going to have us roughly balanced in terms of our cash uses, with the CapEx that is likely to be at the higher end of the $138 to $163 million range that we're projecting here. So we're happy to be continuing that dividend, even though we're not generating a ton of free cash flow, or haven't been recently. As the El Nino effect kicks in, I think we likely will be generating free cash flow, but we're also continuing to invest for growth. In the short term, our exploration program has been focused on wells that are likely to be able to deliver, that are going to help us deliver into this El Nino event. So just making sure that whenever there is demand, which can really ramp up quite quickly, that we have the productive capacity to fulfill that demand. But we have, a series of large, long-term exploration projects as well. In terms of our financial flexibility, that's shown here too, and the capital structure. So as you can see in the chart, it's all very long-dated maturity debt. We've got the $500 million of bonds, and $145 million drawn on a revolving credit facility that's due in 2028 for the bonds and 2027 for the revolver. So 55 remaining on the revolver and $39 million of cash, so not quite $100 million of liquidity, which is quite a lot for a company with the stability in our operations that we have. So talking about I've talked about the stability of our business, and kind of the short-term plan. I'll now get more into the longer-term plans. I already talked a little bit about what we see as attractive in the growth project of building a pipeline to have more capacity to produce and sell into the market. In particular, we've only been supplying the northern coastal market to date, and that is very much dependent on power producers, and those power producers tends to have more variable demand, let's say, than residential or industrial customers, because they tend to ramp up their demand when there's less hydroelectricity, so it's weather dependent. We're attracted to connecting to the interior market, and the interior market is about 60% of that 1 BCF a day that I mentioned in Colombia. And the other thing that attracts us to the interior is what I already mentioned. We see there is one large field that is supplying the majority of the demand in the interior of the country, and that field was discovered in the early 90s or late 1980s and is in a steep decline. So the utilities in central Colombia started coming to us years ago because they saw this problem coming, and that is why we put the project together to link our assets with the Jobo-Medellin pipeline. So our production goes through the Jobo processing plant near our operations, and we're sponsoring the pipeline. We currently own the project to go from our operations to Medellin, which is the second largest city in Colombia, and from there is a pipeline network that is connected to the rest of the interior of Colombia. I say we own the project, we're sponsoring it. We have concluded a deal, and we announced that over a year ago with a Chinese consortium, Setco, which includes pipe manufacturers or a pipe manufacturer, and they are 100% responsible for building the pipeline and then owning and operating it. We will pay them a tariff and secure transportation rights. And we've obviously negotiated all of that to match the sales agreements that we've also negotiated with the utilities in central Colombia. So once all that is in place, we will have 300 million cubic feet a day or more of capacity to bring gas to the market, which will increase that capacity by roughly 50%. So that'll be very significant and good for us when that is in place, which we're currently planning should happen at the end of 2024. We do need to announce soon, hopefully, that we have all the permits in place for that, but we're hoping to do that before the end of the year, and hoping that it'll be in time to allow construction for that December 2024 startup of this pipeline. So that explains how we plan to have capacity to grow capacity to produce more. Of course, we also need to keep filling the reserves because as we're producing, we are always depleting reserves, so we need to keep replacing those. Fortunately, we have a very large inventory of exploration prospects. So here again on the left is our land map, and I mentioned the core area that we're producing from. The tiny little red blobs on this map represent the 20 to 25 producing fields that we have today. The vast majority of those we have discovered organically over the last decade and brought into production. You will note that those are all clustered in the very south of that land area. We have been shooting seismic and have identified a large number of prospects going north along the pipeline fairway, along the edge of the basin, where we see some very large potential that we will be exploring, likely starting at the end of this year or early into next year. And that represents in the table of our prospective resources, that's really that play trend is really represented by the first line there, the tertiary and clastic reservoirs. So with 3 TCF of unrisked potential, 1 TCF of risk potential, that implies our reserves or our resource assessors, independent, think that we have a 1 in 3 chance of success on each of these prospects, which is probably fair, but it's worth noting that our historic track record on 43 exploration wells is 86% success rate. So obviously, as we refine these prospects with better seismic interpretation, this assessment was done prior to our most recent seismic. I think we have a good shot at doing much, much better and continuing to profitably explore this trend. But you'll note in the table there are some much larger resources here as well. And those are all in a deep Cretaceous play in the Middle Magdalena Basin, which is to the southeast here. This is actually Colombia's oldest producing oil basin. It has a very prolific source rock. And we drilled here with the majors looking for shale oil about a decade ago. The majors and us have stopped pursuing that play because politically we don't think fracture stimulation is going to be allowed anytime soon in Colombia. However, with our understanding of the gas market and looking at the potential of the basin, we understood that it probably makes sense to explore deep and close to this resource potential and look for gas, and we believe that there's a large play, and our independent resource assessors have agreed with us on that front, that there's very large resources. So we've been, we made sure that we had a large land position, and we are looking to drill a first well there at Pola towards the end of this, likely to spud towards the end of this year. So we should have results early in 2024 with the first prospect there alone containing more resource potential than our entire 2P reserves. So that's going to be very exciting as we get into looking at that. Wanted to mention that just last week we put out our ESG report. So we're really fortunate in that our play is very gas prone, produces 100% methane, there's very little gas liquids in it, which from a processing point of view makes it pretty easy. Low OPEX, which supports our high netbacks. It also supports relatively low emissions. So, obviously we want to take some credit for, our very positive ESG scores, but the reality is that geology helps us as well. But we took our time, but thinking about this, because when you start from a low base, it can be hard to get to zero emissions. Getting rid of the last emissions can be difficult, but we have now announced our long-term decarbonization goals, announced just last week, as I said, and I think that's we took our time to convince ourselves that we can do so in a commercially sensible way, but these are ambitious goals, and I think it's good for us to signal that we believe we can continue to be a leader. We're proud to be supplying millions of Colombians with clean natural gas to replace other fuels, and very proud of what we've achieved on the ESG front, but also what we're targeting. I wanted to end on that positive note. So, thank you.